The Fed will deliver its decision on policy today, and while this event is always tops on the calendar for event risk, relatively speaking, it isn't an event that is expected to produce too many fireworks. There will be no updated economic projections today, and there will be no press conference. Whatever the market decides to take from the decision is going to come down to language in the monetary policy statement, which may be parsed with extra sensitivity because of this fact. As it stands, the U.S. economy has continued to move along in a direction that is supportive of the Fed's normalization timeline, and despite calls for a less aggressive move to higher rates from the president, there is nothing the Fed uses to guide its policy decisions that would suggest that anything in today's language will be less than what it has already been communicating. If anything, since the last meeting, a live meeting that produced another rate hike, the Fed would be considering additional rate hikes looking out on that dot plot. Economic data has been solid, and downside risks from White House policies may now have just been reduced. But we don't see any reason for the Fed to upgrade its outlook in today's statement, and there isn't really any upside to painting a picture that it has the luxury not to paint. Our point here is that any upgraded hawkishness from the Fed could easily bring renewed distress to financial markets, worried about policy tightening up too quickly. This is something that could scare stocks into downside pressure, which would spill into global markets while trickling down into the real economy. So it would seem the best strategy today is to stay the course. Looking out, the expectation is for another hike in December and 3 more hikes in 2019. As far as the dollar goes, it would seem that all of this would be more than supportive, and yet it's important to remember that markets are about what is priced in relative to outcome. That is to say, what is priced in right now is that everything has been looking good and the Fed should be continuing with its normalization. And so if confirmed, it wouldn't appear for there to be much room for additional US dollar upside. This also means that what is not priced in relative to outcome is anything that might fall short of current expectation, whether it come from the Fed today, which isn't likely, or some other catalyst, which very well could be the case. That's all for now.